Hello dear students, I, Dr. Anuradha Goswami, Associate Professor, Department of Commerce from the Bhopal School of Social Science, welcome you all for this video presentation. Dear students, today we are going to have a discussion on the module 2 of the subject auditing. In this module, today I will be covering the topics like limitation of audit, classification of audit and code of conduct and value system for the auditors. Now, let us today begin our first topic, that is advantages of auditing. Basically, the advantages of auditing can be divided into three various categories. A, the advantage for the business organization itself, the advantage for the owner of the business and the advantage for all the other stakeholders associated with the business. The advantage of auditing for the business itself would be that the auditing of accounts makes the clerks who maintain these books of accounts very careful, alert and vigilant, as they know that their accounts will be checked by somebody else. It helps the management in detection of errors and frauds, sometimes committed by the employee of the organization. It also helps the management in obtaining loan from the bank and other financial institutions because they rely upon the audited financial records. It also improves the public image of these business units when they get their books of accounts audited after every financial year. The auditor can also give them some concrete suggestions regarding the improvement in the way of maintaining their books of accounts. Government authorities also rely on these audited accounts. So, that is the basic advantage of conducting auditing procedure in a business unit for the business itself. Now, if you are owning a business, what the good it will bring to you is that in case business is managed by some agent or representative of the owner and the owner cannot visit the organization on a very regular basis, then auditor helps in knowing the true financial position of the business organization, and that way he can be rest assured that none of his employee is committing any kind of a fraud or a cheating against him through manipulation of books of accounts. Similarly, this is the case for the sole tradership. Similarly, in the case of partnership, the partners can rely on the audited accounts, especially when they are going to settle any kind of a dispute between them regarding the adjustment of capital or valuation of goodwill, when they have any kind of a new partner being admitted to their partnership, or any of their existing partner gets retired, or on the case of the death of a partner. Similarly, in the case of a joint stock company, because we all know that there is a separation between the ownership and the management of the joint stock company, the auditor ensures and gave a peace of mind to the shareholders that the money invested by them is safe. In the case of a trust, where the money is being handled by the trustees, again it will give a peace of mind to the beneficiaries of the trustees, and plus a peace of mind to the donation givers of these trusts that their money is being utilized for the same purpose for which they have given their money in the form of a donation to these trustees. Now, when we look into the third area of our advantage of auditing, that is the advantage of auditing for others, in this situation we have again numerous examples. For example, in the event of claim for a loss of property, an insurance company will also rely upon the audited figure of a particular company. Similarly, financial institution also approve the loan application given by the business units of those business units who have get their books of accounts audited after a financial year. Similarly, if there is a running business being sold out and there is a new buyer, for this person, whatever is the purchase price being asked, he will also rely upon these audited accounts. Again, the auditing will be useful for the authorities like income tax department or the other taxation authorities, because they will know that yes, the company has given the correct valuation of their assets and liabilities and they have filed up the correct amount of tax with them. The audited accounts of a business can also be used as a legal evidence in case if the company faces any kind of a legal issue, or if organization themselves are applying for the bankruptcy or insolvency situations. Also, if there is any kind of a dispute between the employer and an employee of the organization, and if it is specially related to the distribution of the profits, in this case again we can use this audited accounts to settle all these conflicts between the employer and an employee for the distribution of salary or for the distribution of profit. Now, let us move ahead, and after learning what are the basic advantages of getting your books of accounts audited, there are few limitations also which are being attached to it. So, just one by one, we just go through the basic limitations or the delimiting factor of our auditing procedure. Number one is, for example, that once a book of account has been checked by the auditor, he can only express his opinion about the condition or about the status of the financial account being maintained by the employee of the organization. He cannot assure with 100% that this data reveal the correct financial condition of a business unit. Similarly, though the auditor is a very experienced auditor and he knows the principles of accounting and he knows the principles of auditing, still there are certain situations whereby he might not be able to detect the error and the frauds very cunningly committed by the employee. So, that remain a part of limitation when we go for this auditing procedure. Plus, in case if your auditor is somebody who is not that much of an experienced and might not be using his skill properly. So, if he does not apply his whole conscience while doing the auditing procedure due to his carelessness also, and maybe if he is not having that kind of a skill, again he might not be able to check the books of accounts properly, and there might remain the chances that error and fraud remain there in the books of accounts and he did not reported it to the appointing authority. Plus, auditing can always be done for that data which is expressed in numerics. But what if we have to judge about the performance of our managers, right? So, there is a situation whereby an auditor cannot give his opinion about those data that is used by the owner of a business, but it is in a qualitative nature. So, the auditor cannot give his opinion on any given situation which cannot be termed in a numeric condition. Similarly, whenever we go for this auditing which is done at the end of the financial year, so already the records have been made and whatever wrong has been done through them, that has already been done. So, here the role of auditor is only to give the information to the owner, but whatever wrong that has been occurred in the past, now he does not have any control over that. So, these are the basic limitations for the auditing procedure. We discuss another very important material of today's module, and that is types of audit. As you can see in this particular slide of mine, what I have done is I have divided the variety of auditing procedures that are normally used by an auditor depending upon the nature of a business organization. We have divided into 4 categories: 1 on the basis of organization, 2 on the basis of function, 3 on the basis of approach, and finally on the basis of the practical point of view. Now, when we talk about this on the basis of organization, further this area is being divided into 2 parts. One we call it as statutory audit, another one is voluntary audit. Then second one is on the basis of function, it is being divided as internal audit and external audit, and then on the basis of approach, it has been again further subdivided into 3 major areas, that is known as based on time, based on scope, and based on objective. And our last category, that is 4th area, that is auditing being divided from the practical point of view, again consists of nearly 7 variations here. Now, when we look into this first point, that is on the basis of organization, the first bifurcation that we need to understand is statutory audit. So, dear students, basically the statutory audit basically means it's a audit that is need to be compulsorily done. It's a mandatory audit to be conducted. So, any organization for which there has been any act or any statute being created, and that particular organization has to register itself according to that act, conduct its business operation according to that act, even while it is being winding up, they have to follow this act. So, for these kind of an organization, statutory audit is must. Now, let us see which all are the organization who need to compulsorily go for auditing procedure. That means it is not optional for them. Once they are ready with their final accounts, they need to call up an auditor. So, first organization here would be government audit. So, government audit is being conducted for all the government department also, all the government undertaking also, and all the government companies also. The only difference here is that as we discussed in the module 1, auditing basically is conducted by a practicing chartered accountant. But in the case of government audit, these individual private practitioners are not allowed to conduct the auditing of the government companies. For the conduction of government companies, actually the central government has created a audit department itself. So, we have audit department at central level also, we have audit department at a state level also, and the head of this auditing department is known as Comptroller and Auditor General. So, employee of this department will go and conduct the auditing of all the government departments, government undertaking and government companies, and these auditors need to follow the rules and regulations governed by the auditing department. Plus, these auditors are not allowed to conduct the auditing of the private institutions. They will only conduct the audit of the government organization. So, government audit basically means a audit conducted by the employee of the audit department established by the central government or state government, and these fellows are required to follow the terms and conditions being mentioned in the statute of government audit. Now, the second variety here is non-government audit, though it is compulsory, but it is falling under non-government audit. So, first organization which has to mandatorily go for a auditing procedure is company audit. So, basically all those joint stock company which are registered under Companies Act 2013 and the earlier act, for them again it is mandatory, it is compulsory that they need to get their books of accounts audited by a auditor. In this situation, they will hire a private practicing CA to conduct their books of account, to check their books of account. The only thing here is that this auditor not only need to be a practicing CA, this person should be well versed with the provision of the Indian Company Act 2013, because very elaborately in the Companies Act 2013 there are many sections being given which has given the data about the qualification and disqualification of company auditor, the power, duty and liabilities of a company auditor, the books of accounts to be maintained by a joint stock company, and knowing these facts, then he will conduct his auditing procedure in the joint stock company. So, again for the registered joint stock company in India, it is mandatory that they need to get their books of accounts audited at the end of the financial year. Now, when we talk about statutory company, another variety here is of non-government organizations, and under it the second organization is trust. So, basically trust is those kind of a organization whereby their major motive is not to earn profit, they will receive their money in the form of a donation, and for whatever purpose they have created themselves. For example, they can be for the upliftment of the downtrodden people of our society, or for the benefit of improving some sports or cultural or science. So, for the trust, the money is being received in the form of a donation, and the people who are managing these funds are known as trustees, but they will not utilize this fund for their benefit. This fund will be given to the beneficiaries. Again, in order to ensure that the funds are being properly utilized, for the trust who are registered under the Trust Act, it is mandatory that they need to maintain their books of accounts, although there is not a long fleet, a large number of books of accounts to be maintained by them. They simply maintain a cash book, and then they just show the receive of money and the payment of money to the auditor, and that way we ensure that the money received in the form of a donation is being properly utilized for its beneficiaries. Now, another last category for the non-government audit is for audit of other institutions. Now, what all fall under the audit of other institutions are like, for example, electricity companies, that is electricity generation and supply companies, gas companies, bank and insurance companies. Again, they have a respective act for themselves. So, based on these act, the power has been given to the auditor to come and look into these organization. So, public bodies like Reserve Bank of India, Industrial Finance Corporation, these are the organization that have their respective act, and these institutions are also required compulsorily to call for an auditor at the end of a financial year to look into their books of their books of accounts. Now, the another area, the second part that we are going to learn is under on the basis of organization is voluntary audit. Now, when we talk about this word voluntary audit or a private audit, as the name suggests, the meaning is very simple. Unlike the statutory audit, which is mandatory, it is a choice of a business owner whether they like it or not. If they wish, they can call up an auditor to look into their books of accounts, but if not, then there is no act as such which force upon them to hire an auditor to look into their books of accounts. That is why we are calling it as a voluntary audit or a private audit. Now, who all are there who will go for this type of an auditing? So, the first variety here that we see is a auditing of a sole tradership or auditing of a sole proprietorship business. Again, since there is no act, but because sole proprietors sometimes realize this fact that if their books of accounts are being audited regularly, it will give them some kind of an goodwill and a positive public image. So, they do go for the auditing of their books of accounts. Now, here the only precaution that the auditor need to keep in his mind is that since there is no act governing his role, so his area of work will be defined by the contract being entered by the sole trader and the auditor. So, whatever is the term and condition of the auditing need to be put in black and white into this contract, so that later on the owner of a business will not file a case against this auditor saying that he did not did his work with 100% efficiency. Similarly, the voluntary audit is again for partnership businesses. So, whenever partners mutually agree that they need to get their books of accounts audited, they can hire collectively an auditor. So, in general, whenever they revalue their assets or they want to find out the value of their goodwill, or whenever there is a case of admission of a new partner, retirement of a partner or a death of a partner, these are few basic situations whereby the partner decide to call up an auditor to look into their books of accounts, or especially whenever there is any kind of a dispute between this partner related to financial data, again they can call up an auditor to look into these books of account to resolve these confusions and conflict between them. Again, this role of the auditor will depend upon the contract being done by the partner and the auditor himself. Similarly, the voluntary audit also is being done by a few other individuals and institutions. Now, who are these individuals? So, these are like estate manager, rent collector, investors who have a big portfolio, and they have a good amount of expenditure to be done here and to be income generated to them. Again, since they appoint an accountant to maintain their books of accounts, so these estate managers can also call up an auditor to look into these books of accounts. Now, when we talk about other institutions, so few examples are like clubs, hospitals, libraries, colleges, schools, they also maintain their books of accounts, and they do also require the services of an auditor. So, since auditor once come and check into the books of accounts and give a correct viewpoint and the status of the financial data, there are chances whereby these individuals and institution owners do call up an auditor to look into their books of accounts. Now, on the basis of functions, audit is being divided into two parts, internal and external. Normally what happens is that we call the auditor once a financial year is over. Now, in a big business organization, since the number of books, especially like for example joint stock company, the number of books is more, the number of entries is very humongous. So, in this situation, calling the auditor at the end of the year will not give a satisfactory result. So, there is a provision under the Indian Company Act 2013 for the listed companies that they can and they should hire an auditor who will be a regular employee of the organization. He will be drawing the salary from the organization, though he will not be appointed for doing any managerial or any other task. For this organization, this internal auditor will keep on looking into the books of accounts on a regular frequent basis, so that as and when anything wrong is being caught into the books of accounts can be rectified very easily. But on the basis of function, the another variety of auditing basically is external audit. So, mostly for every organization, wherever we call an auditor for doing the auditing of our books of accounts at the end of the financial year, all these auditing put together can be termed as an external audit. So, external auditor will visit the organization once they are ready with their final accounts, and in a one go he will look into these books of accounts and express his opinion, and he will not be a employee of our organization, so he will not draw any salary. Obviously, after doing his task, he will get a lump sum amount of money in the form of a fee for doing this auditing work. Now, when we talk about another variety of auditing, it is continuous audit, which is continuously done throughout the year. It enables the completion of audit at the quickest possible time after closing of the accounts. Interim audit is another variety of auditing in which the audit is being conducted between two financial years, especially a joint stock company when they want to distribute a interim dividend to its shareholder. Periodical audit basically is known as annual, final or complete audit, which is done after financial period is over and the accounts are ready, and the audit is completed in a very short period of time. In the case of a complete audit, each and every transaction of the books of accounts is being checked by the auditor by doing vouching and verification of assets and liabilities, although the complete audit is neither practical or feasible. Just opposite to complete is a partial audit, in which we select few transactions from every book of accounts and we ensure that whether they are correct or not, and based on that the auditor will frame his opinion. Balance sheet audit, as the name signify, in this the auditor only check the assets and the liabilities whether they have been shown at the correct cost. The occasional audit, as the name suggests, is done once whenever there is a need being felt by the owner of a business. It is being conducted on some special occasions, not on a routine basis. So, whenever there is, for example, like we discussed earlier, there is any new admission of a partner in a partnership firm, so there we can conduct this kind of an audit. Now, cash audit, again as the name suggests, is a audit conducted by a auditor whereby he look only into the transaction mentioned in a cash book. And as the name cost audit suggests, basically here we just as an auditor try to determine the accuracy of the cost accounting records being maintained in the organization. Like complete audit, detailed audit is also a audit conducted in case whenever the owner of a business suspect a fraud, then a in-depth checking of the books of accounts is being done by the auditor to find out the reason and the person behind such kind of a fraud. Although most of our auditing are basically quantitative in nature, but there are few new type of auditing emerging which are qualitative in nature, though the data is being translated into quantitatively. So, here it is management audit, whereby we just try to find out the efficiency of the management of the organization. Similarly, propriety audit talk about not only what is the status of the accounts, but also was the decision taken by the people is justified, rational or not. Performance audit basically is done in the case of government companies, whereby we just try to find out the people who are conducting the day-to-day business operations, are they doing these business operations effectively or not. Operational audit, just like efficiency or a performance audit, also is done just to check out that all those operations that are being done in a business unit, are they required or not. Now, the latest addition into this bouquet of our types of audit is environment audit, because our government has now become little conscious about keeping our environment healthy and safe. There are many acts being created for it. So, companies are required to make a record of the money being invested by them on the conservation of the surrounding. Now, we come to the last topic of our today's module, that is the code of conduct and value system for auditors. So, there are a few points that the auditor need to keep in mind. For example, the first point is integrity. So, that means whenever you as an auditor are doing a task, you need to keep your standards of your professional standards very high, and you should not get influenced by your appointing authority. Your objective of doing the auditing should be very clear, and you need to be very partial. You should not get influenced by any of the people associated with you. Plus, while doing the auditing business, if you come across any trade secret of your client, it is your duty not to share these secrets with any competitor of that particular business. Then another point is that whatever is your skill, your qualification, your experience as an auditor, you need to use your whole competence while conducting the auditing procedure. Finally, we always say that there is never end of learning for an auditor himself also. So, he need to keep on improving his skill by attaining more training programs, so that he can enhance and polish his professional skills. So, professional development is also a core area whereby he need to develop himself. So, with this, dear students, I come to the end of today's second module of auditing unit 1. Thank you.